Well, on that note, let's move now to our next discussion. Let's talk about the much-awaited asset tokenization, the next innovation in future. On that note, allow me an opportunity to now call upon our esteemed panelists and moderators. Starting with our moderator, let's give it up for Mr. Sharath Bulusu, the Senior Director, Product Management, Google Pay India. And joining Sharath, may I invite our panelists on stage, Mr. Alan Lim, Director and Head Financial Infrastructure and Artificial Intelligence Office, Monetary Authority of Singapore, Ms. Maha El Dimachki, Center Head, Singapore Center, BIS Innovation Hub, Singapore Center, and Mr. Suvendu Pati, Chief General Manager, FinTech Department, Reserve Bank of India. All right, so with that, may I request Mr. Sharath to kickstart with our conversation, and we'll proceed forward.
Good morning, folks. Welcome to the Global FinTech Fest 2025. And in one of our earlier sessions, we're going to be talking about how tokenization is poised to change the world. I think one of our co-panelists, Mr. Pati, is on his way over from the inaugural address, but we will get started, and he will join us a couple of minutes in. I think to get started, maybe, we've seen many different waves of digitization. And I think it's important for us to think a little bit about how do we consider tokenization to be different. After all, we could have assigned an ID to almost any asset, to any object, and represented it in a computer system, and then said, we can move this around, we can trade it, we can change it in different ways. But obviously with tokens, what makes them different is the fact that they're actually properly backed by that real world thing, whether that happens to be a piece of land, that happens to be a security, or that happens to be things like identity. So maybe to get started, Alan, I'll start with you to say, could you talk to us a little bit about how you see tokenization being different from all the other forms of digitization that we've seen?
Well, first of all, thank you very much. Really appreciate the opportunity to be here. So for me, tokenization is arguably the next step of digitalization. What do I mean by that? We have digitalization that takes existing paper-based documents. I was just speaking, Sharath and I, how he has ability to digitalize his paper, right, into a tablet over here, where it's digitalized. He can make notes and describe and make annotations as we are speaking. But the opportunity that tokenization offers is the ability to make that edits, their records, not just on his tablet, but in a way that if he were to send it to me, I would have that the exact copy that he has, right? And the way that it is done, it's using a combination of technologies, such as having a shared ledger, the same infrastructure, in which both Sharath and I are running on. What's also interesting with, let's call it digitalization 2.0, right? With tokenization is the ability to have features such as smart contracts to enable programmability. So that unlocks and creates new use cases, things like conditional payments, escrow arrangements, and so forth, that really unleashes a whole range of use cases. So I think that's some of the concepts that comes to mind. And we have Mr. Suvendu over here, so maybe we can pass it on to him for his thoughts as well.
Thank you for joining us, Mr. Pati. Welcome to the panel. We were just beginning to talk about tokenization, and Alan was giving us a view of how he thought about it. I think one of the questions that I had for you to get us started would be thinking a little bit about the difference between regulated and unregulated tokens. Why does that difference matter, and what that really entails for us?
Yeah, before, let me catch some breath. I am playing a dual role here as part of the GFF Advisory Council. I had to be there at the inauguration or opening of the GFF, just finished that. Extreme, apologies for being late here. Yeah, first of all, as the other role, let me welcome Maha and Alan and Sharath to this festival. So let's get going. So when coming to the question, we believe that when we are talking about tokenization, we are talking about real-world assets, and we are talking about, especially from the Reserve Bank standpoint, we are talking about real-world financial assets, like the bonds, commercial papers, certificate of deposits, and things like that. There are many things which can get tokenized, but when we are unlocking value or trying to do tokenized to bring in efficiency in terms of settlement or, those kind of stuff, we are really talking about the real world assets. And all of this, when it is anchored, the settlement is anchored in a trusted money, that is the central bank money. That gives the finality of settlement in a true sense. So for any assets to be, ownership changed or fractionalized and getting settled, you need some anchor. And that's why we are talking about the tokenization, which brings efficiency and provides legal certainty to the, those assets. And that provides, we are talking about real world asset tokenization than some of the other things which can be tokenized. But we are really, our efforts, the regulators' efforts or the international organizations, all their efforts are geared towards making the financial markets more efficient, financial system more efficient, and it is in that direction that our focus is on real world assets.
Thank you. I think as you mentioned international markets, I thought maybe we should get Maha's perspective on how BIS has been thinking about this. I know as part of the BIS Innovation Hub, as well as other initiatives, there are a number of projects you have in this space. I think to get us started, can you give us a sense of what are these projects driving towards in terms of real-world initiatives?
Thank you. I'll start by saying it's a real pleasure to be here again. Always a pleasure to visit Mumbai, and very grateful for the invitation. And this is a very, interesting topic. It's something that everybody is talking about for the reasons that were just explained in terms of, what are the benefits that tokenization brings and, the key features that we consider. So, it's really important not to do projects for the sake of it, really listen to our community. And we work closely, for those of you who don't know, with central banks to consider where are some of the gaps in the financial system, or where are some of the interesting areas that we can experiment with technology to allow them to discharge their duties more effectively. So that efficiency point, the point around, what is the real reason for some of these new technologies coming in is very important. So it's not technology for the sake of technology. I think some of the benefits of tokenization have been around its features. So things like the programmability being the key one, where you compose transactions in ways that we haven't done before, where you can achieve atomic settlement, and that creates so much more efficiency, 24/7, etc. And these were some of the key features that got us to start to think about, with our partner central banks, of how could we experiment with this? And a lot of it, we looked at experiments with tokenizing central bank money as the safe settlement asset. As Suvendu mentioned just now, whenever we're looking at financial transactions, by and large, I mean, not everything, but by and large, most things are settled in central bank money as that sort of safe settlement asset. And so a lot of our projects actually look at that. One of our projects looks at tokenizing FX, Project Rialto. And that is, again, we've experimented with settling in central bank money. It creates that sort of atomic settlement and that kind of efficiency gains. These are experiments, by the way, so I have to position that, it's the learnings that we put out there that could then potentially move to the next phase. But other experiments, earlier experiments, is looking at tokenizing central bank money to achieve sort of cross-border transactions. And this is an earlier project out of the Singapore Centre, but also we have a number of them around the world. One of our larger projects at the moment is Agora, and this involves 7 central banks, and it looks at tokenizing, so looking at tokenized deposits and tokenized central bank money, where we can make the cross-border kind of clearing and settlement of wholesale transactions much more efficient. So these are some ideas, but what I would leave you with on this particular question is, when we think about this technology, we have to think about how do we enhance what we have today, or is it needed to replace what we have today? And so, again, I can share some thoughts on, down the line, some thoughts on how we look at technology actually improving, enhancing what we do today, to make it more efficient, but also, experiments where it might be we might be creating a new platform.
Thank you. I think when we look at a lot of these new technologies, as much as we look at what's happening internationally, also look at specific experiments and specific initiatives in countries. I think Mr. Pati mentioned some of the work that RBI is interested in. I'd love to hear what's happening with Project Guardian and MAS, because the MAS has been talking a fair bit about how tokenization can change financial markets. How much of it is an experiment? How much of it is, a place where you've already got learnings to share with us?
So Project Guardian has been an opportunity to bring together both the public and the private sector in Singapore, but also internationally. The way that I would describe Project Guardian, just for everyone's benefit, is think of it as a cross-border sandbox for financial institutions to really understand the opportunities that tokenization bring, particularly in the capital market space. What do I mean? So it means the ability to tokenize or digitally represent a bond, represent a money market fund, represent deposits, for example, and be able to use it for purposes of collateral management, treasury management, for investment purposes, and so forth. We started this in 2023, and we have about 40 different institutions, ranging from banks, asset managers, exchanges, custodians, etc. I think what has started in a lot of these cases as initial pilots, they were commercial, but commercial pilots in a very small scale, to some of them actually moving to commercially available already offerings. So there are tokenized money market funds, for example, that are being made available by some of these institutions. They are sold to different sets of investors, and in small amounts, unlocking, arguably, more liquidity, enabling purposes of treasury management, more efficient movement of funds across different players. So that has given, I guess, the opportunity for both the public sector and also the private sector to really understand the opportunities, but also the risk. What are necessary guardrails, for example, that should be put in place? What's the industry best practices for how these assets could be represented on the shared ledger? I think it's still work in progress, but I think we are seeing early green shoots, I would say, of firms who have invested and are seeing fruits of their investments turning into commercial products that they're making available to their set of clients and the broader ecosystem.
It's great to hear that a lot of these are now beginning to become real products. But often with technologies like these, what we also worry about is, can they achieve scale? And for scale, a lot of what's going to matter is, can these different disparate systems talk to each other? So if we're going to have different initiatives, maybe even within a single jurisdiction, from different players, you were mentioning how private and public players are coming together to do this. And if everyone had a different standard, it just becomes a lot harder to work. So maybe, Maha, from BIS's perspective, because you obviously have a more international perspective on this, how do you see the evolution of interoperability and standardization in this space?
Yeah, it's a difficult topic, right? Because it's complex. And when we look at interoperability, it's got very different lenses. Some people think of interoperability from a purely technology perspective. Others think of interoperability from a legal, regulatory standpoint. And I think it's all of those. But we also have to think about interoperability from the evolution of how the technology is being used, and what are different players doing? So I'll just give you some examples. One is, we think about, today we have financial markets that are deeply entrenched in our lives. And that's very difficult to dislodge and sort of, all of a sudden, you don't just cut it down and, move to the next thing. There's usually a transition period. So you have, how do you interoperate what we have today versus what you're looking to develop for the future? And that's just one way of kind of, let's say, the existing technology, which is largely centralized. And what we're talking about here is a decentralized nature of, blockchain technologies and, achieving tokenization, by and large. I'm just generalizing. But how do these two interoperate within a particular market? That's one question. Then you have, what you build in a particular market, which you have to respect your jurisdictional or your sort of local laws and regulatory requirements and so on. How do you interoperate with other markets around the world? And then finally, even with some of these new technologies coming up, how do they interoperate with each other? Because, there's a big debate, for those of you who are following all of this, there's a debate around public blockchains and private blockchains and how do they interoperate. And, we talk about private blockchains, which is close to a group, if you like, is this walled garden. But lately, we've seen at least 3 or 4 players coming out and saying, we want to build a public blockchain. Well, all of a sudden, you're going to get fragmentation even with public blockchains. And so there's a real sort of dynamic at the moment. If we're not careful, fragmentation will actually set in. And so it's an effort that I think has to be combined. Everybody has to play a role. When we're looking at what exists in a particular country and how you're looking to either complement what you have or build something new, what are other players internationally doing? How do we connect into some of the standard setters, for example, internationally? And maybe, ISO 20022 is a great example where this is something that sort of everybody started to converge towards, and full harmonization is usually not achieved. So how do we find that sort of, the interpretation, the interoperability in a way that is practical is very important. So that's from a technology perspective, that's one example. But then from a regulatory perspective, there's a number of ways in which we approach this. Again, looking at setting standards, the ambition of harmonizing is one important factor in this. But also looking at how we use technology to actually create that interoperability or maybe create that efficiency without necessarily asking a country to change its regulatory requirements. And we tested that, and we continue to test it actually in one of our projects. In fact, the Reserve Bank of India is now a partner with us on Project Mandala. And what we do is we look at how do we streamline and automate compliance checks without necessarily having to change jurisdictional differences in terms of regulatory requirements. So you can achieve the jurisdictional differences, you can achieve the compliance, but you could still, pre-validate and create a compliance proof to say that all of these compliance checks that respect all the jurisdictional differences have been done. So when we look at interoperability, I hope I haven't kind of gone into a whirlwind and confused everybody, but when we look at interoperability, there are different levers in which we can achieve it. Some are technology-based, and some have to be kind of practical, coming together and looking at where, how do we get the best possible outcome, and we move forward, with something that's going to work as these technologies are evolving.
Can I just,
Yeah, please.
Very important point, and when we are, such kind of innovations are taking across the various jurisdictions, it's for the international organizations and standard setting bodies like BIS, which is also itself is piloting many of such projects. It's desirable that we come up with those interoperabilities and standards and have those kind of regulations in place, common standards, common set of regulations in place, which will foster compatibility and movements across, asset movement across jurisdictions in a friction-free manner. So that is something that, yes, it's now early days in some sense, despite some experimentation. But the thing is that we need to move ahead on that directions very, very quickly so that we really reap the benefits of efficiency across jurisdictions. And they have a bigger role to play in that.
Absolutely. But maybe now let's start getting a little more into the specific details, right? We've spoken at a fairly high level about tokenization. If we really want this to be interoperable, standardized, at some level, we cannot wish away that there will be multiple systems, multiple ambitions that different jurisdictions might have about what they want to do for their country. But at some level, this will only work if we are able to create common settlement standards, and that there are semantics of settlement that make sense across all of these systems. Now, in the world that we've occupied until now, it's been easy to think of it as, hey, if it's a financial asset, maybe there's central bank money behind it. Everyone kind of understands what it means, what a rupee means or what a dollar means and so on. But in a world where we start thinking about tokenization, how do you see the role of central bank money and settlement semantics changing, and what should we be looking at more carefully to make sure these systems are trusted?
Yeah, absolutely. I think I touched upon it during the first answer itself. For any assets, for changing hands and ownership changing, settlement is a key element in that. And there cannot be, I mean, central bank money is the purest form of money one can have. And that's the safest. It provides the singleness of money, what the BIS has been advocating and talking about. And there cannot be any, and ultimately whatever settlement systems you have across jurisdictions in various form of fiat money and others, it all finally settles in the central bank money, and then only it's truly called as settled. So ultimately I would see that when central bank money is also getting tokenized, and both central bank money, the funding instrument, as well as the assets, which are also getting tokenized, they sit on the same ledger, same blockchain. The efficiency is immense to harness. And we can have programmability, smart contracts, automated payments, so those things can be easily built into these two tokenized instruments. There are other options available, but in my view, for the entire financial sector to have that kind of trust and believe that the settlement is truly final, central bank money, that is the central bank digital currency, can play a very effective role. And that's how, and once it comes through these kind of settlement processes and efficiency is gained, I think the confidence that the financial market players would get is immense. Of course, innovation is underway. We should explore all forms of other settlement forms like the bank deposits and other things are also getting experimented. But true settlement, I would still believe that central bank money offers the purest form of settlement and the finality to any settlement process. And that's for, it can play an effective anchor for the tokenized money environment when that money gets tokenized.
Thank you. I think if we had to extend that a little bit further, and Alan, maybe a question to you is, if we want to be able to bring central bank money into these tokenized systems, practically speaking, how is this going to work from a system design perspective? Is it primarily going to be that everything shares a single rail? Is it going to be just a single ledger, shared ledgers? What are the design options that you've been looking at as you've done experiments in MAS?
Yeah, so I think kind of reflecting and contrasting what we have today and what we're describing over here. In today's world, you have payment systems, whether it's low value, high value payment systems, they kind of sit within their ecosystem. You have exchanges for securities purposes, you could pre-fund it and so forth, but these are kind of distinct systems. The way I'll describe it is individual rails that you have, right, for specific purposes, right? You don't kind of cross between them. But I think the potential with tokenization that we're speaking about is the ability for these different assets that are represented digitally to interact with each other. You can use one asset, whether it's a trade receivable as a collateral, to finance or to use it for borrowing purposes. So how do we unlock that? For that, I think we need to kind of have a different paradigm. We need to look at it not just as individual ledgers and systems. It's more like an open road in which you have public buses, private cars running on this kind of open road with a view that you have tokenized deposits, potentially, private money that's out there, but also the role of the central bank. Now, how these different forms of money interact with each other, arguably we could take reference from existing monetary system in which you have already the role of the commercial bank and you have the role of the central bank. It may be a case where the central bank could get involved in certain type of transaction as the ultimate safe settlement assets. It may not necessarily be the case that a central bank gets involved in all transactions. Perhaps this is something that the commercial banks, the non-bank financial institutions who come in to act as the intermediary to facilitate the access and distribution to the private, to the mass population. So I think that's where we see the different layers in which you would actually coexist. Just also the point about interoperability, perhaps. I think based on what we are seeing, it's less likely that there will be a convergence to one single ledger. Just like in most cases, we don't see a convergence to one single cloud service provider. We don't see a convergence to one mobile device provider, nor one telco. Quite likely, there will be many different ledgers. Now, how do we kind of approach this? The way that we've been thinking about this is really perhaps less of it being one ledger, but perhaps a set of different ledgers. And maybe what we can focus on is maybe the expectations on each of these ledgers, such that if they are interacting with each other, if you have a tokenized assets, whether it's a bond, a money market fund, or deposits, for example, if you were to move these assets across the different infrastructures, they would be able to be compatible, and you can do this quite easily with minimal friction. We've been supporting and working on this initiative called the Global Layer 1, GL1 initiative, which is a public-private collaboration. The idea is, let's figure out what's the expectations, what's the right specification for such ledgers, without having necessarily dictating what that ledger should be. I think we really look forward to have the opportunity to contribute to this as a public good, so that at the end state, perhaps it's not inconceivable that even as we are looking across borders, looking across different use cases, we can unlock greater utility, we can mix and match the different pieces, just like we see in other parts of commerce, mixing and matching little Lego bricks, for example, in constructing new forms of financial services that perhaps we have not been able to see till now.
Thank you. This is very interesting, but maybe to get to the next level of detail, we'd have to think of, this is also going to throw up a lot of regulatory challenges, because it's one thing for us to be able to consider whether shared ledgers or unified rails work, but there is a question of how is this going to work in a way that markets and the individuals and firms that participate in them trust it. So maybe Mr. Pati, from your point of view, how do you see the development of tokenized assets, whether with respect to what's happening in India or what you're observing globally? How do you see this evolving from a regulatory perspective?
Yeah, it's, all countries, many countries and multilateral organizations are experimenting. We also started our bit experimenting on this. We have picked up a very simple use case on certificate of deposits as the first use case to be considered for tokenizations. And that's a short-term instrument issued by the banks and subscribed mostly by the banks and other players. So this is the pilot we have commenced, and we would have a launch tomorrow. So the banks have partnered with us, and so it's again the wholesale CBDC is acting as the funding leg. But couple of things from a regulatory standpoint, when we introduce tokenization of these kind of financial instruments or assets, we would believe that integrity and enforceability has to be clearly articulated. These are some of the principles that, for example, if let's say underlying asset is getting tokenized, and the tokenized asset should have the same legal status, the ownership should be recognized by the entire ecosystem. It should not lead to a duplication of, or issues regarding ownership. So if there are legal changes that would be required to make this work, that needs to be put in place. So from a regulatory standpoint, we need to give clear thought as to There is no underlying, there is no duplication happening. There are guardrails in place so that the legal enforceability, the ownership rights, everything is ensured. Then we also need to see how fractionalization, owning small bits of the same large asset can really percolate to the retail investors who would earlier being constrained to invest in a minimum issue size. So fractionalization is one element which we should consider as to which would broad base the investor class. So I would say that inclusivity and bringing efficiency to the entire tokenization space should be our goal. And that is not that the current markets are inefficient, but take the efficiency to the next level. Bring further improvements in those systems and processes. It also would, those kind of things also require guardrails to be put in place so that in what manner this is fractionalized, how they are getting recognized across systems. And so these are some of the things where regulatory transition need to take place also. And sometimes we need to also figure out on the how the smart contract programmability and other things are built in. So there are also guardrails and rules that needs to be prescribed by the financial market regulator so that the market participants understand the same thing in the same way and there is no misgiving or misunderstanding among various players and each one is going their way. So there are certain degree while innovation needs to be fostered, we also need to put in place those kind of high-level principles and make this innovation get mainstreamed in a very safe and secure manner and in a trusted manner. So these are some of the principles I thought it should be kept in mind while we, from a regulatory standpoint, we need to work on them to put in place those additional guardrails in jurisdictions if they require so.
Thank you. I'll put a pin in that point about fractionalization and the benefit for people, because at least as someone who builds consumer products, making the connection between all this discussion about tokenization, what it does at a systemic level, down to saying how does this really change the lives of individuals on the ground is something I'd like to get to. But before we get to that point, I think what you've been talking about with respect to enforceability, guardrails for a system that's inherently way more complex for people to get, I think there are probably a number of other risks that we need to worry about that go beyond the technical. And I know Maha BIS has been studying a lot of this. What are the types of risks that you worry about or that you would advise the people that you work with to pay attention to as we build a more tokenized world?
Yeah, again, another topic that needs a panel in and of itself. But if we think about, exactly what Suvendu just mentioned around, making sure that these technologies develop in a safe way. So the experimentation, and may I add, India is, really at the forefront of this. I think, it's difficult for me to sit here and tell you, what you should be thinking about when actually your Reserve Bank is doing quite a lot in this space. And kind of going back to the fundamentals is really important here when we look at risks. There is a reason why central bank money is the safest settlement asset. There's a reason why central banks became the lender of last resort. It's that protection of the financial system. It's the safeguarding of the financial system. The way the oversight role that they play. All these important components to, by and large, what keeps the financial system safe and secure, and the trust point that again was mentioned. So if we go back to fundamentals, what are these things that we really value that gives us the trust? And I think we need to maintain these. Whether it's settlement in central bank money as the safe settlement asset, whether it's the oversight, making sure that money laundering and CFT, countering terrorist financing, money laundering is combated, terrorist financing is combated, fraud, scams, cybersecurity. Again, when we're thinking about these technologies and quantum coming in and potentially to kind of throwing everything out, and I hope, at more conferences we get to talk more about sort of the impact of quantum or what it would look like. And so all of these are things that we really need to think about. But to me, it's let's go back to the fundamental things that we really value and make sure that when we're thinking about innovation, we're not throwing away the baby with the bathwater. We're keeping the good things that we want to maintain. And we can do that. And then we move on that basis. Now, with the thinking around this, and I'm sure the RBI and the government of India and all of you are thinking about this for India, and others are doing this for their various jurisdictions. What works specifically for your jurisdiction? What are the fundamentals that you need to maintain? And therefore, what are the technology choices that you want to think about? One platform, maybe a cyber risk, too much concentration. More than one platform, how do you achieve interoperability? So on and so forth. And then from there, where are the gaps where you need to then make the policy choices? Such as, a simple example, we have this concept called settlement finality in the traditional finance world. It doesn't really exist in the tokenized world. What is this deterministic settlement thing? How do we make sure that by a particular point, settlement is final and no questions asked? It's a legal construct. So we need to think about the policy choices that then we overlay on top of our technology choices. And what's interesting about risks is that it starts out, when technology is starting off, it starts out very diverse. Those who are innovating think that the risks are much lower. And the central banks probably think that the risks are much higher. And then as we get to learn these technologies and have these debates, we then converge on where the risks actually are. And I think we're at that point, actually, where we recognize what the risks are, and we can then move forward. And this is why we're seeing moving from experimentation to pilots, which is what you're doing here, and potentially to real-world applications.
Just if your time permits for a minute, you asked about the risks. If you go down to the, study the literature, the risks that get, typically talked about in the asset tokenization context are liquidity, because it's a gross settlement. There could be demands on higher liquidity. Leverage, because of there is an existing asset and those assets are getting tokenized. Are these assets are again redeployed to take for the loans or leveraged to get funds? And there are operational risks, like if there are platforms which are being maintained and which are being, if they are not safe, if there are issues and the smart contracts or programmability feature is not audited properly, it can lead to multiple, disruptions. But I would like to convey a very optimistic note. These risks are nothing new. These risks are very much associated with any technology innovation. So these are very much manageable risks, and these are very much can be addressed through regulatory guardrails. So nothing to fear about it is what I would understand, and these are very much, world has seen a lot of technological innovations, and these things do get talked about as potential risks, but these are, to my mind, very, very manageable risks through regulatory guidance. So I'm pretty optimistic that this would get managed easily rather than more
It's almost like you read my mind, because I was going to say, we have a few minutes left. Rather than ending on the note of all the risks that we should worry about, in my mind, I was framing this question as, well, if we waited a decade, and then I'm changing that time frame now to say, Alan, if you were back at GFF in 2030, so 5 years, how do you see markets would have changed if the dream of tokenization is realized as a mainstream technology and it starts pervading markets?
Okay, I don't know about specific prediction, but one of the use cases that I've been speaking about is the fact that today, when we travel, a lot of us don't carry physical cash today, right? But I think with all these digitalization that's happening, I think we're putting money in different apps, different systems, and so forth. I think kind of an ideal, maybe a desired end state is that I should, as a consumer, be able to access my money, my identity with any provider without being locked into a single app or single interface, right? Just like how today, when we travel, I have a physical wallet. In some countries, I have different denominations of different notes and coins in that wallet. I don't have to buy a new wallet in order to fit a currency of a single currency. So can we imagine a future in which I can do that, right? Even as we work towards tokenization and digitalization. So that's perhaps something to look at.
Mr. Pati, maybe a minute from you on how does the life of the average person on the street change in the next 5 years if this dream is realized?
Yeah, I'm quite optimistic and sanguine that we'll have a much better world and much efficient world, and people would be spoiled for choices, and you would not need to sell one asset to buy another. You can possibly move, change your ownership from one asset directly to another asset, across regulators, straight away from a, let's say, banking asset to a capital market asset or insurance asset or different, vice versa. So that brings to the larger question which Augustine and Nandan wrote a paper on FinTech. So, something of that sort is definitely on the horizon, I would believe. Multiple ledgers talk to each other, multiple asset classes get exchanged, and all would be, you don't get locked into anything. So it's a universal, seamless highway that I would be imagining 5 years down the line.
Maha, maybe last question is for you. You've heard the optimism from both of them about how lives can change as a result of this. Obviously, as a member of BIS, and you see the multilateral perspective and the multinational perspective, how do you make sure that this happens? What are the building blocks that you're hoping will fall into place over the next few years for this to be realized?
That's a big ask, making sure that this happens. Look, I think that the train has left the station. I think certainly tokenization is here to stay. It feels like it's really moving into scale now. I think if we could see that people can have better financial lives that will ensure quality of life and better outcomes, then that would be a really good outcome. And this is for everybody around the world.
Thank you. As we were waiting to prepare for the panel and walk in today, I ran into someone in the speaker's lounge who was talking about the startup that they're doing, where they're enabling people to be able to get livestock on credit, right? And this person was describing the kinds of challenges they were facing trying to build this. And one of the things they kind of described was, hey, I can actually use a token to represent the livestock and make this more tradable. At that moment, for a few seconds, it sounded a bit too fantastic. But when you start realizing the importance of that for the real-world economy, what it does to millions of people who actually are running, let's say in this case, the agricultural sector, the dairy sector, you start realizing this technology has the ability to bring what we think of as the power of high finance that is concentrated in banks and large cities, down to like the last pin code in India, down to the last village in any country that you can imagine. And so while at some level this sounds like a deeply technical problem, a problem that's concerned only with maybe the efficiency of markets and market operators, I think the real value is, as our panelists have been describing, when the benefits start reaching every individual on the street. With that, thank you very much, Alan, Maha, and Mr. Pati for joining us this morning, and thank you to our audience as well.
Thank you, Sharath.
With that, if I may request all our eminent speakers to please join us in the center for a group photograph. Ladies and gentlemen, what a fantastic discussion this was.